Trading isn't hard, it's only misunderstood. This is 1 to 5 risk to reward ratio. I'm going to teach you my buy bias stamp, sell bias, and exhaustion absorption, which is how to catch reversals, momentum absorption, which is continuation setups, and how to catch reversals practically. This is 1 to 5 risk to reward ratio. The importance of volume in the price action. So what we attempt to do in this video is to show you how to know where the market participants are involved in the market. All right, so the first thing we want to do is we're going to learn about the buy bias stamp. Now, what comprises of this bias? What exactly is the buy bias stamp? Now we have the inside bar. So let's use our drawing tool. We have our inside bar. By the way, by the end of this video, feel free to download the free PDF below. So we have the inside bar. This is the inside bar candle, and this is the mother bar. This is what is called the mother bar, the inside bar, and we have the breakout bar. So these three bars are very vital in identifying where price is going or knowing the participants of the market. Have you ever seen a footprint chart before? Footprint chart, for example, shows us exactly the amount of volume inside this candle. It also shows us the amount of volume inside this candle. It also shows us the amount of volume inside this candle. Literally, the footprint chart actually shows us the participants in the market, whether it is buy or to sell. Have you also wondered why we have bullish candles and we also have bearish candles? One of the reasons is simply because in each of these candles we see both buying and selling are involved. The only difference is that for this bullish candle, more buyers are involved in it, more active buyers, while for this bearish candle, more active sellers. Okay, so the idea behind this strategy is our ability to be able to trade alongside the market makers. We need to know where the others are, and we trade alongside the others. All right, so I won't bore us with most of those information now. In case you want more of those information, you might want to subscribe to the channel or drop a comment section below telling me to show you exactly how to do this. So what comprises of the buy bias? We have the inside bar and we have the breakout bar, and this is the mother bar. So this comprises of the buy bias stamp 1, and this is very important. Of course, I will show us in the chat how we can use this and how you can improve your trading. So this is buy bias stamp 2. Now for stamp 1, you didn't notice something. The inside bar followed by the breakout bar are of the same direction. It means that the sellers it means that both candles have the buyers involved. So the buyers are here, the buyers are here. So two buyers will give us this stamp 1, buy stamp 1. Okay, so the same thing if we have if we go for the buy stamp 2, but this is quite different. For buy stamp 2, we have the inside bar here and we have the breakout candle here. And where is the mother bar? The mother bar is this particular candle. So we have the mother bar. Subsequently, I will show us how important the mother bar is, but for now let's stick to this, and you can use this to catch reversals in your next trade. So we have this as the mother bar, we have this as the inside bar, and we have this as the breakout bar. So this breakout bar is a more like a confirmation candle where we know the participants that are in the market. You know, we don't have an insider access to the footprint chart, so basically there has to be a way we manipulate price, and this is exactly where the KDRC stamp comes in. All right, So it's very important that you pay attention to this. So for stamp 2, we need an inside bar and an opposing bearish candle. All right, so we need a bullish inside bar and an opposing bearish candle. So this tells us that, okay, price is selling, is buying. It tells us that buyers are involved in the market. So what happens, for example, if we have this as an inside bar and we have this as a bearish candle? Of course, this let's assume, we're assuming, okay, so assuming that this is an inside bar, or let's use the diagram. So we have inside, assuming that we have our inside bar here and our mother bar is here, all right, and the breakout bar is here, assuming this is our breakout bar. Okay, breakout bar. So automatically what we are, let's say this is bullish, right? This is bullish and this is a bearish. This is a bearish candle. So this shows us that this is buy stamp 2. However, what happens if the next candle opens bearish? What happens if the other one opens bearish? What also happens if the other one opens bearish? The same thing. It means that for this push to the downside, every selling or every candle after this our confirmation, it means it is buyers that are involved. Okay, you know that if in order for you to buy something, there has to be a form of exchange, right? So there has to be a demand for there to be a supply, right? So it's the same idea that we're using. Whenever you place your buy trade, for example, let's assume you take your buy trade here. So anytime you take your buy trade here, there is an equivalent sell trade taking here, the same place. Do you understand? Right, that's why it's called buy stops. We have buy stops, for example, and we have a lot of stop orders, because the moment you buy, automatically our brokers place an invisible sell orders. All right, let me not bore us with all of those information in this series. So subsequently I'm going to show us exactly how that works. So the same thing for the sell buyers stamp 1. So for the sales buyer stamp 1, we have what? Our inside bar and the breakout bar. So for the breakout bar and the inside bar, they are of the same direction. All right, they are of the same participants. So we have sales here. So this confirms our sell buyers. So automatically we can start looking for sales, but it's not that we're going to look for sales blindly. When we go to the chart, you see exactly how I use this. By the way, if by now you have not liked the video, please can you do well to like the video, and also don't hesitate to drop a comment in the comment box below. You can criticize whatever I'm doing, whatever I'm teaching you now, or you can actually say something good about it. It tells me that you are following or you followed till this point. Okay, so what happens if, for example, look at this bullish candle. So after our confirmation, for example, every candle we see here, every candle are what? Are sell participants. So we have sellers on this particular candle. Every candle here are all sell participants. So it doesn't matter if price start pushing to the upside like this. So assuming that immediately our confirmation is seen, price start pushing to the upside like this, immediately that is found. For example, this push to the upside is still the sellers that are involved. All right, because you see, sometimes in order for you to sell, what you have to take the price higher. Is it not true? So for you to sell, you take the price higher, and for you to buy, you want to buy in a cheap zone. Okay, so that's the concept of discount and premium in ICT trading. So for example, drawing this, when we get to momentum absorption, I'm going to teach us that, but for now let's take on how to catch reversals in trading. Okay, so let's check the sell bias tool. So the sell bias stamp tool is the inside bar and the breakout candle, which is bullish. All right, which is bullish. So we have an inside bar here and we have a bullish candle. So every push here like this is a sell stamp. So what happens if the push went to the upside? It's still a sell stamp. All right, so it is getting more interesting. Like now, and subscribe if you have not, while I take you to the chart. So this is chart examples, and this is the practical aspect of this particular video. Please don't hesitate, don't just go without liking it. Sure, it took me some time to make this for you guys for free. All right, and I also recommend you watch it over and over again. So it's time for us to check the charts. Okay, so welcome to the Euro USD chart. Can I use this strategy for any time frame? Yes. Can I use this strategy for any pair? Yes. Can I use this strategy for any market? Yes. But today we're going to use it for Euro USD because I love trading Euro USD because of its spread. All right, and I also trade other pairs, but for the purpose of this video, we are going to do Euro USD today. Just let me know below in case you want to know the one I want to do, or the one you want me to make a specific one for you. Specific one. What am I saying? All right, so let's dive right in. No time to waste. So let's use the bar replay tool and go to the past. All right, let's cut here. All right, London session opens somewhere here. All right, it opens on the next candle, so let's cut this. So let's attempt and see if we're able to catch some good and quality trades. All right, so what do we want to do in this video? We're going to use the 1 hour time frame. We're going to be using 1 hour as our higher time frame, and we'll use our 5 minutes for lower time frame. Okay, so put that in mind as we move on. Okay, so the first thing we need to do is to identify our various stamp. So assuming that we just come to the chart and this is where we met price, so this is a new day. What we need to do is we need to start identifying our stamp. So how do we do that? So first we have an inside buyer, and we have this following one, and this is what? Sell stamp. This is sell stamp 2. All right, so we have sell stamp 2. So for example, let's write that here, sell stamp 2. So let's just put it SS2. SS2. Those of us in Nigeria will understand what SS2 mean. All right, and we have this inside bar followed by another bearish candle, which means we have sellers that are in control. So sellers are in control of all of this move. Sellers are in control. Okay, so this is what we have. Another one, which is a confirmation here. So what is here? We have what? We have sell stamp 1. I hope you understand why it's like that. It's simple. All right, it's simple. So the next thing that I want to do is identify the price. Okay, so we need to check immediately. Price is coming to take this high, this swing point. Okay, we need to check which participants are on this high. Are they buyers or sellers? So can you answer the question? I give you 1 second. Sellers are involved. So sellers are on this particular what is it called now? Sellers are on this particular swing point. So how about this other one? Because you need to trade using the latest swing points. Okay, So how about this one? Can we confirm who are in control? We have an inside buyer followed by a breakout candle, bearish breakout candle. So it means we have what? Buyers. So what it means is this: we have buyers here. So we have buy stamp. So this buy stamp what? Buy stamp 2. All right, do you understand? So we have buy stamp 2 here, and automatically this high is what? Buy stamp 2. Do you understand? So all of this candle here, it is buyers that are involved. So we have more of buyers. So they are pushing price down to buy. They push price down to buy. Do you understand? So we have buyers here. So in order for us to see a reversal or to trade our reversal, we need to see an absorption, and that's what we call the exhaustion absorption. If you are trading footprint chart, if you have seen footprint charts before, you will understand that that's exactly how it is being traded. Okay, so this is a good mind, guys. You don't want to miss out this opportunity, okay, to learn this. All right, you want to learn, join my free Telegram channel. I'll check the video description below. Okay, the next thing we want to do, now we know the participant that are on this high. So the next thing is we need to know the participant that are that is coming to take price. So we have this as the passive orders, and we have this as the aggressors. Now the aggressors are people who are actively involved. All right, now just like buying and selling. So for example, just say this high, these people here, they are selling. All right, and that's why we have it as a sell what? A sell stamp. And these people are buying. Why? We have an inside bar here, and confirm with our breakout candle, and this is what? Buy stamp 1. So which people are pushing price to the upside? Buyers, right? So for there to be sellers, there has to be buyers in the market. So automatically when we have price push up, buyers push price up, we want buyers to what? To take out the sellers and continue to the downside. Do you understand? So that is the idea behind the reversal setups. So let's play price and see. So for the next candle, of course, it is still buyers that are involved, because it is buyers that took out this candle, this swing high, the most recent swing. So look at the candle that took it out. So that's what we're interested in, and where becomes our liquidity. So we have our liquidity here. Sorry about that. So this area here becomes our draw on liquidity. All these zones become our draw on liquidity. All right, so let's just mark this low. So we have this low as our draw on liquidity. So in the future, we want price to come and take out this low. It doesn't have to come, it doesn't have to take it immediately, but this is our expectation. So another thing is timing. So we have London session just opened with this candle. So is this a buy stamp or a sell stamp? It is a sell stamp. It's a sell stamp. So automatically it's even giving us a more confirmation that the sellers are now involved in the market. All right, so we have buyers took out sellers. So these buyers, they bought from the sellers, and because of that, sellers are now selling more. All right, so we have this. So automatically we are looking for selling opportunity. All right, so I won't bore us with timing for now, okay, but let's go to our lower time frame. Remember, we said our high time frame will be 1 hour and lower time frame is what? 15 minutes or 5 minutes. So you can use any time frame, by the way, but that's what we're doing now. So how do we know if we are going to sell? The same thing, the same process. So in order for us not to waste the time, understand which people are involved here. So let's do the typing. Which people are involved here? We have what? We have buyers, right? So we have buyers. So we have what? Buy stamp 1. So this is buy stamp 1 are involved in this high. All right. So what about this high? This high is buy stamp 1. This high is buy stamp 1. The same participant, the same buyers are the ones that are involved in all of this movement. Do you understand? And what else do we have? We have this followed by this. So we have what? Sellers. So we are the sellers. These are the sellers. So we have what? Sell stamp 1. Sell stamp 1. All right. Do you understand? We have the sellers right there. So the next thing that we want to note is this: every move going to the downside are involved by the sellers. Okay, remember we are already selling, we're looking for selling opportunities, so let's focus on that. Otherwise I would have shown you how you can also catch this move to the upside, but let's not let me not bore you with all of those informations for now. So who are the participants here? Sellers, right? So sellers. So this move is still sellers. All right, still sellers. So for them to sell very well, they will also need to buy more raw products. Do you understand? So just take it as a cycle. So automatically we now have this high. So where is the highest point and where are they coming to take? Okay, so we have this and this becomes our highest point. And who are there? Which participants are there? Buyers. So we need sellers to come and take out buyers. Do you understand? So immediately buyers immediately sellers comes to take the buyers, right? We now have what? We have what is called, let me type it. We have what is called exhaustion, absorption, right there. That's exactly what we have, right? So it is a reversal setup. Okay, it's a reversal setup. So basically we can start looking for sales. So it's not yet time. So the next London session is opening, has opened. Yeah, of course we had it's going to open in 5 minutes. Sorry. So we can choose to enter here, for example. Can enter here, so we can wait for this candle to close, for example. All right, can wait for this candle to close. All right, and we'll look for our buy setup. All right, so price is pushing. So which stamp is this? What stamp is this? All right, let me not bore us with all of the informations, so let's continue. So you should be able to tell me what stamp is that. Okay, so you see that price is kind of consolidating, right? And finally we have a close in that zone. So we can enter here and our stop loss just right there, or we can enter immediately we see this break, right? And our stop loss, same place. And where is our target? Remember we have a target here on our 1 hour. Okay, so sometimes you don't really have to, hold price till it gets there. It doesn't have to be every time. All right, doesn't have to be every time. You can just target 1 to 2, 1 to 3, and you are good to go. All right, but in this case, let's target that low. Okay, now as you can see, which people are involved in the market now? Sellers. All right, so I'm just showing you that's another way you can enter right there. So let's play price. Okay, let's play price. So price is moving nicely. So what? Sellers are involved. Sellers are what? Involved. Look at that. So who are here? Which people are here? We have sellers here. So for the people the market makers coming to take this low, who are the they are sellers too. So it's giving us what? Momentum absorption. That's we're continuing the trend. So it gives us even a more confidence in taking our setup. So we can look for further entries, maybe somewhere here around these zones. All right. So but that's not what we're talking about. We're just talking about learning about reversals today. So let's push price, and as you can see, price, let's play price because of time, push to the downside and hit our take profit right there. All right, this is 1 to 5 risk to reward ratio. Now you don't have to, like I said, you don't have to catch 1 to 5 risk to reward ratio to be profitable. 1 to 2, 1 to 3, it's okay, right? So let's play price, and let's see if we can do one more example. All right, so you can see price come and take that nicely, and we are good. So what else can we look out for? So immediately our drawn liquidity have been reached, we can go back to our 1 hour time frame, and we can even manage our trade on 1 hour time frame, for example. All right, so this is an example. Okay, so we have this. So which people are involved? Sellers. So which implies that we're what? We're looking for more selling opportunities. All right, is it clear? Means we're what? Looking for more selling opportunities. So let's see. All right, so see how price went down nicely. Oh, this was quite fast. Now there's something else I want to show us too, but I'm going to show us now. Imagine that you hold your trade. That's insane, right? So imagine you have this understanding, you can leave a runner. It depends on you, right? Look at that. That's insane. 1 to 20 risk to reward ratio. Of course, I'm not saying you should hold your trade to 1 to 20. All right, but I'm just giving you an idea. Imagine that you have an understanding of this and you are able to master this. Okay, so that's exactly how you can catch reversals. So let's just do this one quickly. So immediately price came here. Look at that, price came, took this, but this time around there was a sweep, and beyond that sweep we have what? Sellers are involved. And which people are here? All right, this low, which low? Sellers. This low, sellers. So you look at the sellers, this low, sellers. All right, so sellers. So which means we might see a retracement, but the retracement is for continuation, and that's exactly what we had here. All right, I personally took this trade today, which was yesterday. I took this trade, and of course it also went very, very well. You can see that, right? So buyers, sellers, buyers, right? So which people are here? We have sellers. Yeah, sales. We have sellers here. Let's do this. We have sellers here, right? So these are sellers. Okay, so what about this? These are buyers, right? But this one now is buy stamp 1. So it is buyers that are coming to take this, right? Ouch. So we have, yes, so that's exactly what we have, buyers. So confirming what? The sales. So what happens? We come, take this out, we go to lower time frame, 5 minutes. The same process, we do the same thing. All right, look at that, catching the move from there. Boom. If you are on my free Telegram channel, you will notice that I actually caught this move, and that was, our stop loss was somewhere there. All right, so imagine that we held. Of course, I didn't hold the trade till now, but this could be a potential draw on liquidity, like I said. And of course, during New York session, it also gave us another entry opportunity as well. All right, look at that. So there was a momentum absorption, so I don't want to talk about that now. Subsequently, we are going to do that. And there was another entry here. There was another entry here. Go check it out on my free Telegram channel. And in case you want the slide, all right, in case you want the slide, check the video description to download the slide for free. Okay, so I believe that you've learned a lot from this video. Please, the only thing I want from you is for you to like and share with others. All right, share with others because it's very interesting, isn't it? Is this strategy not interesting? Yes, it is my own personal strategy. All right, Kume defining range concept, and of course it's a game changer. Meanwhile, in case you want to join the mentorship, that's where I'll be teaching all the secrets behind the strategy and also live applications. All right, so see you